Welcome back to another episode. Today we're going to take a closer look at Coreweave and Applied Digital. We can see Applied Digital is up nearly 50% on the day, and that is because they got a massive contract coming in from Coreweave. So in today's episode, we're going to take a closer look at that contract. We're going to see what it kind of entitles, some updates to it, and more importantly, I also want to take a closer look at some recent updates impacting Coreweave outside of this market. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so let's just jump into the main reason Applied Digital is up. So we can see Applied Digital on June 2nd announced that they did receive two approximately 15-year lease agreements with Coreweave, the AI hyperscaler. Under the lease agreement, Applied Digital will deliver 250 megawatts of critical IT load to host Coreweave's artificial intelligence and high-performance computing infrastructure in its Ellenel, North Dakota data center, which is going to approximately generate $7 billion in total revenue from these leases. Now, assuming 15 years, $7 billion, and we are going to see, it might not start off right away. It might kind of start off later this year, as it all depends on that Ellenel, North Dakota data center. But $7 billion in 15 years, it's about a little bit less than $500 million of total revenue annually, broken down. Now, if you look at the current market cap of Applied Digital, it's about $2.3 billion. So right now, this contract on a quarterly basis is about a fifth of this company's total market cap. So you can see kind of the excitement of why the stock is rallying up a nice amount. It can also continue to showcase maybe that Applied Digitals might be a strong player with the digital infrastructure market or with the AI digital market, that it can open up the opportunity for even more contracts from companies like Applied, from Coreweave or other players. So that's why Coreweave investors are pretty excited. And I can actually see maybe why the valuation jumped the way it did. Now, it also mentions that pursuant to the lease agreements, Coreweave also retained the options to access an additional 150 megawatts of critical IT and load at this Ellenel. Now, the Ellenel campus was planned to be engineered for high-density compute and designed to scale up to 1 gigawatt over time. The two approximately 15-year lease agreements mark a foundational step in unlocking the campus' full potential. So, I mean, right now, as we're going to see, the first step of this Ellenel campus is actually 400 megawatts, but in theory, it has the pipeline and the capacity to jump up to 1 gigawatt if demand expands. So already for the phase one center, which is 400 megawatts, the 250 megawatts already kind of is a good portion of that company's total revenue. So for Applied Digital, this is really great news. Now, I wanted to kind of get some information here on this plant in Ellenel, and it is the North Dakota, and there are a few reasons Applied Digital is focused in this first. First, there is an abundant energy in North Dakota when they announced this kind of manufacturing or construction of the Ellenel AI data center. The first reason we saw that North Dakota generated 50% more electricity than it used in 2023, producing roughly 42 million megawatts per hour versus 28 million megawatts hours consumed. And right now, right in the AI space, power constraint is a massive issue. So if you can go to a state that generates more power than it uses, then that overall creates kind of at least a protection from that bottleneck. And that's, I guess, really great planning in forms of Applied Digital. There's also low built-in operational costs because obviously electricity is also cheaper than the national average. One of the reasons though could be that supply chain issue, and I wonder how that changes over time and what kind of long-term contracts they may kind of consume later on. Obviously, if North Dakota generates 50% more electricity than they use, then the demand curve is not as high there. So normally you should pay lower costs in electricity. But now once you start kind of putting more AI data centers and producing and using more power, now that supply to demand curve is changing a little bit. And we got to see how that variable changes and what kind of long-term contracts, right, this kind of Applied Digital has with the state of North Dakota. Some other things, favorable favorable climate. North Dakota's cold weather offers natural cooling benefits for their data center. So that's going to be pretty exciting during the kind of winter era where they're probably going to save a nice amount of money on cooling thanks to snow and whatnot. Now, I wanted to learn more about North Dakota's Ellenel Center, but unfortunately, I don't have the time to look at it. So here we're going to go to finchat.io/Jose for my special offer. But I want to look at the most recent conference here. So I want to look at the view transcript, but I also want to just kind of use AI. So I want to know more about the Ellenel Campus, how much power is there right now, and future growth. I want it to be descriptive. So let's see the kind of answer it gives me. So the Ellenel Campus, like I mentioned, has an initial 400 megawatts of critical IT. Now, construction is progressing on schedule, and the first building with 100 megawatts is expected to be in service, generating revenue by the fourth quarter of this year. So this order already from Coreweave, if they start off right away, it would pretty much take over this whole data center first building. Now, they do mention that construction is also underway for the second building to provide 150 megawatts, and that is expected by the end of calendar quarter 2 of 2026, and then generating revenue in quarter 3 of 2026. Building 3, which is the final 150 of that initial 400, is expected to be in service quarter 1 of 2027. The great thing is power is secured for all 3 buildings, as is the supply chain. So with this 250 megawatt, Coreweave is already pretty much signing for that building 1 and potentially building 2. This can kind of obviously be seen as a bullish scenario for Coreweave, as it does show that, hey, look, Coreweave is already building a lot of AI infrastructure, but the demand for AI is so strong that they need to go out and outsource even more and more from other players like Applied Digital. So pretty interesting there. And we can see with this contract of 250, in theory, it seems like they pretty much secure the first building and the second building of phase 1. And the additional 150 that they announced was most likely, right, because we did see the additional 150 is also open on the table for them. Where do we see that? An extra additional 150. That, in theory, is the third building and the completement of phase 1 for that 400 megawatts. So really, really good here for Coreweave. The company also does mention that in the long-term position, this campus has the ability to enter into the gigawatt of data center solutions. So this is, if it goes well, if the demand is here, we can see Coreweave becoming a massive investor and a customer of Applied Digital. Now, some other things coming out here for Coreweave, if we want to look at some recent updates. You guys know my thoughts, right? We talked about Coreweave when the stock was in the 40s. In the 40s, I did my overall portfolio allocation. I mentioned I was buying Coreweave at the 40s. At these levels, I am going to say I've been dollar cost averaging out north of 100. I'm not selling my full position, but I am dollar cost averaging out. Again, not selling full position, but for me to nearly 3x or more than 3x, nearly 3x in just a month's time. It, to me, being a big position and becoming massive, it's like a no-brainer. If I was to enter at these levels, it would be very small dollar cost averaging, as I do believe the AI market is very volatile. So I just wanted to share my thoughts there. But Coreweave on May 29th did announce that it's expanding its NVDA. I almost called it NVIDIA. That was wild. It's NVIDIA Blackwell fleet with general availability of the B200. They've already, if we kind of look at their products, they already have kind of plenty of GB200 and VL72s, though I'm pretty sure these have been rented out to the hyperscalers already. So doing really well with the Blackwell platform. One of my favorite things about Coreweave is they do get a lot of these chips ahead of time. Or not ahead of time, but one on the top line because of the great partnership with NVIDIA. And I believe that is super crucial. Some other thing that we did see is on May 28th, Coreweave did announce about a $2 million aggregate principal loan due in 2030. Coreweave intended to use that money for offerings of its overall business. I'm going to guess some of that money that they built here was pretty much to do this kind of deal here with Applied Digital. Now, I did talk a little bit about this. Maybe some investors might be worried that Coreweave is building a little too much debt too quickly. My counter argument to that really quickly is when this company IPO'd, its IPO was so bad that the company's price IPO was lowered, but more importantly, the amount of shares that it let go on IPO was dropped down dramatically by about 25%. So in theory, them building up debt right now, and if they do start to maybe sell some shares in these upcoming price points, to them it actually is beneficial for them, as they would raise a lot more money than they would have through the IPO process. So bad scenario for Coreweave, ended up becoming a very, very lucky move for them. So I hope you guys enjoyed this very quick update. Take care, have a good day, and see you all next time.